What is going on, everyone? Anthony Drew Gary here, host of the How To Show, where we talk about optimizing life, money, and happiness one how to at a time. So, most weeks we would be diving into one of those topics, but this week we're going to talk about how to not lose your mind following the stock market and what it's done in 2022 so far. And so, another way to call this video is how to avoid the stock market crash of 2022. And this isn't all that different from the video that I did in 2020, but I want to shed some light on just a thought process around some of the ideas that you may be thinking about when you see the news each and every day. The stock market is down, the stock market is down further, the stock market is down even further, and it seems like it's in this predictable state of decline, or at least I thought so. I'm recording this on Monday evening. It is Monday the 24th. And today I was all set on recording this video about how the stock market is tanking and what we should do about it. The stock market was down roughly 4% midday today, and it closed up 0.5%. And I thought to myself, okay, well, I'm going to sound really stupid if I still make this video, but maybe that is the point here. I sound stupid for a living, hopefully not, but I don't want the actions of any one particular day in the stock market, maybe even one particular week in the stock market, one particular month in the stock market, to impact your thoughts on the opportunities to invest long term. Because the reality of the situation is unless you need the money that you are planning on investing or have already invested within the next couple of months, weeks, years, this is really moot to you. If you've got a situation where you're not going to touch your retirement, let's say, for another 5 years, 10 years down the road, the fact that it went down a couple of degree points here and there over the first couple of weeks of 2022, in the grand scheme of things, is irrelevant. And the best way that I can illustrate that is to take a broad approach to looking at what the stock market has done over long periods of time. So we'll switch over and do that now. So here we're tracking the progress for the Vanguard S&P 500 exchange traded fund. This is basically buying a collection of the 500 biggest companies in the country, really. And so you can see today that it happened to go up by basically 0.5%, 0.42. But over the last week, it has tanked significantly, down 4%. Last month, down 7.85%. And so this outcome starts to get a little gloomy. And really the worst of it is seen at the 1 month level, because over time, the ride continues to show more and more data points as you continue to expand out. And so basically the last week or the last 2 weeks have wiped out the last 6 months worth of gains, which sounds awful. And in the short term, it's not great. But if you continue to step out, if you go year to date, year to date doesn't look real good because it's still early in the year. It's 24 days in. What I meant to do is get into the 1 year term. And so you start to realize that this dip that happened is really only going back to trading prices that were from October. And so if you think about where we were at the beginning of last year, we're still significantly ahead of that. And if you think about it in 5-year increments, you can see what happened during 2020, where I made the video about that. We are light years ahead of where we were at the time. And if you go back even further, you can continue to see that trend. And if you take it one step further, the max for this particular fund, it's really still a hockey stick type of growth. And the S&P 500 fund that we're looking at right now only goes back to 2010. So let's just switch gears here and look at it in a micro level. Let's look at the S&P 500 specifically, not any one specific fund, which has been around since 1982, at least the way Google shows it in this map. And the last month worth of events barely even shows up on this map. And so in the grand scheme of things, this month has sucked for the stock market. But if you are a long-term vision type of person, you will hopefully be able to see past it based on the long-term outcome, the long-term nature of the stock market. And you may be thinking to this, well, what happens if this crashes and everything goes down to zero? Well, I'm optimistic that's not going to happen, because if the S&P 500 goes down to zero, as I've talked about in other videos, that basically means the collapse of the American economy as we know it. And at that point, you're not going to need to buy stocks. You will need to be buying food. You need to be buying ammunition, things of that nature, because the entire world will be in chaos. I don't see it coming anytime soon. So, taking a long, broad thought behind what's happening recently, it barely even shows up on the map in the grand scheme of things. So, now that we've looked at this in a long term approach, thinking about things in years, not days, it seems to be a little less scary. And I hope you feel that way. I know that I feel that way. And ultimately, the stock market is on sale the last couple of weeks. There's an opportunity there where you can buy it cheaper than you could have bought it last week, but who knows what it's going to be at next week. And so the optimist would say you just continue to buy, you continue to buy, you continue to buy. Really, regardless of what the stock market is doing, your dollar cost average, you end out okay. And so to wrap this video up, I want to take a couple of snippets that I found that Warren Buffett had talked about in previous years, and I just think they're really fun. And so the first one is to be fearful when others are greedy, and to be greedy when others are fearful. Right now there's a lot of fear involved in the stock market. Maybe that's the side to be greedy upon. Go buy yourself some stock if you feel the nerve, and if it goes down, that's okay. If it goes up, that's okay too, because over the long haul it is going to go up, because that's what the economy is set up to do with growth in the economy. The bright side to that is that he also said something that I found really fascinating, and it really ties into this week and opportunities to buy when the market is dipping. He said, every decade or so, dark clouds will fill the economic skies, and they will briefly rain gold. When downpours of that sort occur, it is imperative that we rush outdoors carrying wash tubs and not teaspoons, and that we will do. So go get your wash tub, get it out, get it ready. Stock market may go up, may go down. The bright side to it is a roller coaster, and the only people who get hurt on roller coasters are those who jump off before the ride is over. Hopefully this gives you a little bit of peace of mind as the market goes up and down the next couple of days, weeks, months, and ultimately years. And so that's going to wrap up this video, this episode of the show. Hopefully you're able to take some solace in what I was talking about. And if you've got any comments or any feedback, let me know in the comments section down below. And you can also hit the like button to let the YouTube algorithm know that this is a video that other people should be watching as well, to help them calm their fears. As always, if you got a topic for a future idea on the show, let me know about it in the comments. I will respond to each and every one of those. And if you are looking to sell your house in the Indianapolis market, I would love to help you out with that. You can get in touch with me at indiedwell.com in the show notes or in the comments down below. Until next time, this is Anthony Drew Gary, host of The How To Show, signing off.